welcome to our IPO presentation where we would be discussing a growth opportunity for Aldi through an IPO. Aldi is in the top 10 grocery retailer in the UK, and in 2023, Aldi enjoyed a significant 9.6% share of the UK grocery market, up from 7.8% in the previous year. This growth trajectory is impressive and highlights Aldi's continued growth throughout the years. Comparative analysis of Aldi's debt-to-equity ratio with its competitors, Tesco and Sainsbury's, reveals that Aldi's capital structure is significantly reliant on debt, with the DE ratio being 80%, current ratio being 0.52, quick ratio being 0.24, and EPS being 10 pence. To fund this expansion, our recommendation is for Aldi to raise approximately £12 billion. This investment will be vital in realizing their plan of opening 500 new stores in the next 3 to 5 years, thereby cementing Aldi's position as a key player in the UK grocery market.
To estimate the firm's value, we employed the discounted cash flow model. Our IPO valuation leverages a 3-year DCF grounded in actual growth with an effective tax rate of 19%, 6% equity risk premium, and a 5% growth rate from Aldi sales. The discounted cash flow shows the actual unlevered free cash flow started from 2020 with a negative value of £120,778. Post-IPO, DCF projects positive trends starting at £63,750 in 2023, reaching an enterprise value of £45.7 billion. Crucial for underwriting, our WACC includes key components such as a 19% tax rate, 1.2% unlevered beta, 7.76% cost of debt, and 4.17% cost of equity, yielding 5.73%. This comprehensive metric guides an accurate assessment of Aldi's financial landscape for the IPO valuation.
Moving ahead to the capital asset pricing model, we can state that Aldi's share return to an investor is 11.22%. The risk-free rate is found by using the industry's 10-year treasury rate as well as the beta. The risks of using the industry beta is that it will converge with the target company business risk. However, this could be justified as it is then re-levered at the target capital structure of Aldi. According to the trade-off theory, Aldi should focus on reducing the debt level in order to benefit from the tax shield associated with the debt. The risk of going through an IPO for Aldi could be market conditions, investor responses before and after the IPO, valuation, liquidity, macroeconomic factors, and so on. So post-IPO, the current investors are diluting the shares from 100% to 78%, leaving the 22% for new shareholders. So we are raising 450 million equity shares at £26.65 per share, which would generate the £12 billion.
So continue with the discount rate on the share price. Considering the economic crisis, the retail industry has been impacted by the high inflation. We apply an IPO discount from 10 to 30% to estimate the share price of £27.25, and the estimated share price range from 19 to £24.52. To give a better understanding to the investor, we conduct the intrinsic and market value. There an upside in the share price of £22.84 with a return of 86% due to the expansion of plan of raising equity in 2026. RD Environment's goal is to use renewable energy since 2019 and by 2025 cutting plastic use by 50%. Their social goal is to support health with access to eat fresh initiative by offering free resources for children's nutrition education. Their governance goal is to support initiatives such as teenage cancer trust by prioritizing a health work environment, offering a competitive pay and fair treatment for all individuals.
Aldi's process of an IPO to becoming publicly traded on the London Stock Exchange involves several key components. The unlevered discounted cash flow analysis underlies the steady rise in free cash flow, supporting the company's valuation. The aim to raise £12 billion by issuing shares to the public is a strategic move which aligns with the aim to raise capital and reduce the debt-to-equity ratio, signaling a prudent financial strategy. Additionally, the expected return according to the capital asset pricing model indicate a targeted rate of return on equity at 11.22%, offering investor insight into the expected profitability. Overall, the IPO process for Aldi is designed to leverage positive future cash flows, optimize share prices, and achieve financial goals, reinforcing investor confidence in the company's growth prospects. To conclude, thank you for watching our IPO presentation for Aldi 2023.